If you understand the context, then that strategy, whatever it may be, you'll start to make sense that that strategy that I'm using will work here, but it won't work there. Because all strategies work to a certain degree. You just need the right understanding of what the market's doing.
Welcome everyone. Today I'm sitting down with Navin Prithyani. It's been a while we spoke. Navin is someone that I really admire. We spent a lot of time in Bangkok together, kind of talking trading, price action, up to some cool stuff here. So welcome to the podcast, Navin. Good to have you back, and looking forward to discuss with you a lot of topics here.
Thank you very much, Etienne. First of all, congratulations on getting 400 plus now on the episodes.
I appreciate it. 100,000 on YouTube and then the podcast. It's pretty cool.
All right. And I also saw you're very close to 100,000 subscribers. So let's hope this video is the video that gets you over that 100,000.
That'd be cool. That'd be cool for sure. I appreciate it. So let's do a quick catch up. I want to hear kind of what you're up to these days and what's been new since we last spoke, I think like 3 years ago or so.
Yeah. So I think our last podcast we did, I believe you asked me, we went into like lifestyle of a trader, stuff like that, right? I believe this is when you came to my house, my penthouse in Bangkok at that time. So I envisioned myself doing more with my life. Trading was always going good anyways. Education was good. My students are extremely happy. We wanted to push the envelope a bit. All of 2022, we sort of, instead of being more on the front end and pumping out videos on YouTube or, assisting more or creating more developments on ways to help people, we sort of took a step back. We went back to the drawing board and we're like, okay, well, 2022, post pandemic, everyone's going to come into trading. And when everyone's coming into trading, everyone's going to get hammered with price action, do this, do that. And, the famous sentence, most traders, like where it all begins, the sentence always begins with most traders do this. I don't want you to do this. So I want to sort of get away from all that stuff and be like, they're all going to be frustrated with massive amounts of information. And I want to clean it up a little bit. So take a different approach to it. Maybe, in this podcast, if you want, I can share my screen. I can sort of share a glimpse of what that is, what that means. And it will help bring a little bit of clarity to people just who are new getting into this market and looking at it from a set of eyes that is not traditionally talked about. But yeah, 2022, everything was on the back end, huge developments coming in. We have a desktop app that is now released called Market Countdown. When I share my screen, I can talk about that. I can show it to you how it looks as well. You should get one too, since you have a Mac now. So by the way, how are you liking your Mac?
Yeah, quite good. Very nice. I got the most recent one, I think, a year ago or so. So yeah, it's been very good. Definitely makes a big difference.
Yeah, it's just so much easier. I got enough problems to learn, and focus on trading. I don't want to worry about my laptop.
Yeah, for sure. No, I made a mistake to go back to Windows for a while, and I really regretted it. So definitely go back to Mac. Yeah, exactly. So it's been a big journey on that. But this is cool. So you're always traveling fairly often, and then you go to the Maldives quite a bit. You're always on the go. You always have to kind of keep training up with that. How do you kind of keep track with trading while you're traveling and like doing all this stuff on the side?
It's good you asked that, because that is the main purpose why I made Market Countdown, right? So right now I'm in Dubai. This is home for me. This is my home office. So this is home for me. If I'm in Dubai, because I'm mostly here, I know what time the market opens, what time it closes and stuff like that. I don't really need to worry about it. It's just natural. But because I travel so often, it's very difficult for me to be like, well, London's opening now. That is GMT +1, and I am in GMT +13 or 14 or whatever it is, and I have to like backtrack and be like, I hope I'm ready for London. And I sit there waiting for London. I'm like, I have 2 more hours to wait. It's not even open yet. So sometimes that calculation of figuring out when the markets are actually open was a pain in the butt. So I had my team make for me basically a app that I can just put on the top corner of my screen on the Mac, where it just basically tells me within 2 hours, London's going to open. Within 30 minutes, New York is going to open. And because I trade mostly on the open, it also gives me a timer and tells me it's been 30 minutes since the open, or it's been 2 hours since the open. So it sort of gives me a bird's eye view of I'm in the market too long, time to step away, So That's basically what we've recently developed. There's more projects coming out as well as we get for a few more months into this year. So very excited, extremely excited.
Yeah, this is something I also had a tough time with, especially like when you're in the plane and you like go in a different time zone, then you arrive there, you're not sure exactly what time zone it is or how far back you are from whatever the market opens. So being able to know that definitely helps.
Right.
In terms of like the mindset and getting ready for trading when you travel, even the kind of process or routine to just get ready for taking trades, basically.
Yeah. So mindset is extremely important to me. It's very, very important to me. In fact, it is more important than strategy, technique, all of that stuff. Mindset is everything for me. I think I don't know if it's the second episode I did with you or the second time when I did a podcast with you, we talked about that generally a little bit, where if I needed a reset, I would start waking up at 3:00 in the morning and basically start working when the whole world is sleeping. So mindset is extremely important. And I think it's what makes or breaks a trader. It's the ability to know who you are, what you actually want, and why is it that you're in this game. Okay, because everyone will come to this game, but not everyone will have the passion and desire that you can make for yourself. So if you're competing not just with one customer, because when you're going face to face, let's say you're working in a restaurant or something, and your only job is a customer comes to you and you want to get him a table and you want to seat him. That's your opponent. You see who's coming to you and you want to make him happy. And then you get paid for that service. But when you're in the markets, you don't see who you're dealing with, and you're dealing with the world's best of the best. At least the mindset needs to be at its A level, You can't be coming and saying, you know what, I'm going to click this green button today and I'm going to make so much money and I'm going to get a golden Ferrari. It's like, it's unfortunately, we got to get the mindset like properly prepped.
So how do you do that specifically? Do you have any routine before you take any trades for the day or before you get on the charts?
Yeah, so I have morning routines that I do, not necessarily affirmations as, a lot of people do. I don't really do affirmations. I do meditations, but more guided meditations, where I'm basically directing my mind after I bring it down to a certain level of frequency. So what that basically means when I say frequency is there's different states in your mind when you're wide awake, when you're partially asleep. When you wake up in the middle of the night and then you feel like you're awake, but you're not really awake. I like to get the brain down to that frequency, because that's the frequency where I look at it like you can reprogram who you are. You can reprogram your identity at that level. You try to do it when you're awake, it's basically, hitting your head against the wall. Like you have so many habits that's developed as you're a kid through society, family, friends, culture, that if you go to change that, it's not going to work. You got to go deep inside and subconsciously rewire it. So I like to bring it down to that level, see myself trading, visualize days going really fantastic. I'm looking at trades better than anybody else on the planet, picking out fantastic trades and then trading them with sizes of 2,000, 3,000, 4,000 lots. So just massive, massive growth, as if it's already happened rather than it should happen.
Interesting.
So that's just, my routine.
Now, you did mention trading the open, which I think is something people should do more of, because some traders are kind of there for the whole day looking to place trades for like the next 8 hours when they go to the charts. So if you want to maybe share your screen and just explain how do you look at the open and trade the open specifically, I think that'd be pretty cool to people to understand and kind of conceptualize a little bit.
Sure. I'll open up the screen in a moment. I can share some techniques that I do as well. But if there's, I encounter like 1,000 students at a time on a regular basis. But one of the things that I noticed that's a common trait why people just sit there in front of their computers is a couple of things. One, there's technique issues. And two, if they have the technique issues mastered, where it's like, I know what I need to do, I know my system, I know my strategy, but they're still there, then there is no goal in mind, which is more of like they're trying to just trade for the sake of trading. So sometimes you got to shake that student a little bit and be like, wait a minute, what were you doing before this industry? What is that thing you were doing before, wherever you might be working? Why did you come to this industry? Is it more money? Is it freedom? Or is it to just sit in front of your screen 24 hours a day? No one's going to answer that C, right? No one's going to say, I came to sit in front of my screen 24 hours a day. Like it's not possible. So if someone says money or if someone says freedom, then it's like, what kind of freedom is 18 hours in front of the screen? That's not freedom. That's not freedom. That's slavery. That's literally new age slavery. Like that's wrong. So you need to focus and bring your attention to, well, where is most of the business in the market? At the open. Where are you going to be when you trade? At the open. Where are you going to be at lunchtime? In the restaurant. Get away from that screen. So we got to get that clear in people's heads. It's like, if freedom is what you want, then develop your system to work around the opens and then step away. Just be done for the day. You don't need to be grinding and grinding and grinding. You can't hustle your way through the markets. It doesn't work like that.
Very good point. Especially with the schedule you have and I have, it would be impossible to just like trade like 5 or 6 hours a day. That'd be very tough. So being able to do it in a shorter period of time, but like kind of like doing the 80-20, you kind of focus on the place where the most trades happen, where you can make money.
Yeah.
And you go away and do something else in the meantime.
Correct. And it's healthier, right? When you actually go away, your mind resets. And you come back and you trade New York, and then you come back, you trade Asia, you come back, you trade London, reset,
Very good point. Yeah. So you want to kind of guide people through this on the screen, that would be very cool. I think people will appreciate it.
So one of the things why we took a step back in 2022 and we're trying to, help the newer traders out. Our specialty always has been intermediate traders and senior traders, because our clientele are generally real estate tycoons, doctors, surgeons. We're dealing with the best of the best in the world. So we don't like to baby them, right? With the basics. We go straight into, all right, sit down next to me. Here's what you're going to do. And here's how you're going to do it. But now we're more looking at, we see a wave of problems coming into 2023 and 2024, where people are just going to be like plastered with wrong information as they enter the markets. So we want to revisit all of that stuff and clean it up. And really have them look at the markets with a different eye. So let's talk about that for a moment here. Now, this is something, obviously, if you're watching this and things are making sense to you, don't forget to like, subscribe, and do whatever. We got to get to that 100,000 mark for Etienne.
I appreciate it. Yeah, I should do that more often. But good point.
Yeah, trust me, this is going to be the best podcast you have on your channel. Because it needs to change the paradigm and the way people are looking at the charts. Now, generally, when people look at the charts, I want to take a step back and be like, okay, let's leave the charts for one moment. Take a step back and just be like, in your real life, how do you ever earn money? In reality, why does cash get handed to you? Either you create a product and you sell it, or you create a service and you exchange the service for the cash. Now tell me this, why do you get paid in the markets? Is it for drawing the best trend line ever? Is that why we get paid? Is because my trend line is the most beautiful trend line, like Picasso or something? Why do we get paid in this market? What are you actually doing of value? This is where the misconception comes in, where we just come into the market saying, everyone's just clicking a button and making money, so therefore that's where money is made. That's not possible. Money is made when there's a product or a service. I want you to think of it from that angle. So if the markets are calm, okay, this calmness, the first thing that might come to your mind if you're a little bit in the industry will come, oh, that's a range. Range is buy low, sell high. Range is sell high and close at the bottom. No, forget the mentality of range. I want you to look at this pattern and think of this as there's happiness, there's harmony in the market. Think of it as if you are a restaurant, okay, and there is a vendor. Okay, so if you're a restaurant and there is a vendor on the other side, do you want your prices to be normal if you have to buy, let's say, milk? If you have to buy milk, you want your milk to be $1 today and $300 tomorrow? Well, that's crazy. You want satisfaction. You want equilibrium. $1, $1.01, $1.05 acceptable. It's okay. but not beyond that. So this is a satisfactory market. It means the real people who need the product are happy. Traders don't need the product. You need to understand what is our role in this industry. We don't actually care for the product nor the price. So when was the last time if you traded, let's say, pound yen or euro USD and you're like, yes, I have euros. No one cares. Like no one cares about that. Whether you buy an Apple stock or Tesla stock or anything, you don't really care for that company. You're simply saying, how do I turn a profit? That's what trader mindset is. Where's my margin? Okay. There's no involvement to price. There is no involvement or attachment or emotional attachment to the product itself. So keep that in mind. Okay. But there are people who actually need the product. Okay. So there is a market. So let's remove this word. Okay. And let's focus on this word. Okay. Let's focus on this word, market. And for now, I'm going to remove this and we're going to say fruit. We're just going to change the word a little bit because everybody knows what a fruit is. So what, Etienne, what's a fruit that you enjoy?
Let's go with mango. Why not?
Mango. Let's go mangoes. Okay. So mangoes. Mangoes is a fruit that is quite popular, especially even in Thailand. You're in Bangkok right now, right, Etienne?
Exactly, in Bangkok, yeah.
Yeah. And mango sticky rice is like, oh man, even if there's if you have a guest, you're like, I'm going to have you try mango sticky rice, right? It's like a staple. Like people love eating that. Do you like it?
Yeah, definitely. Yeah.
Okay. So let's take mangoes, right? So all these store owners who sell these mango sticky rices or they need the mangoes on a regular basis. They need that stock coming in so they can buy it and then they can sell it and they make a profit on the margin. So if the mango is selling for $1, okay, and you can get it for $1 and you can sell for $3, that's your profit as a vendor, that's your profit. Okay. So now take a look at this. Suddenly a situation happens in the market for whatsoever reason. Let's say a pandemic hits and now not everyone is growing a mango. Half the people are growing mangoes. And there is a basket of people that says, we have only 500 mangoes, but there's 20,000 stores who need a lot of mangoes, 100 mangoes each. What do you think the vendor who has 500 mango is going to do? Is he going to sell it to you for $1? No. If this is us, we will go to him saying, you know what? Give me the 500. I'll give you $2 for it. Give me the 500. I'll give you $5 for it. This is what makes the price rise. Now take a moment and think about that for a second. Prices did not go up because someone hit the buy button. Prices went up because someone didn't get the product. There's a huge misconception when the price goes up. People look at that as, oh, there's a big buyer. That's not a big buyer. That is a unfulfilled market. There is an imbalance in the market. People are not getting what they want. That's why the price is rising. And that to us as traders, we are looking at that saying, there's a demand in the mango market. What's a mango? I don't care. There's a demand in the mango market. There is 20,000 stores who need a ton of mangoes, and I can clearly see they're not getting it. Let's see when the store vendor gives a discount on this, and let's see how they get filled. So now the store owner has raised the price, gone up to $20. People are like, 20, I can't buy that $20. I will never make any money. There's no margin. Discount comes in. Store owner's like, okay, 19. Will you buy it? Some people buy it. Store owner has no choice, has to give a discount. The vendor, 18. Will you buy it? Some people buy it. No choice, discount. 15. Is that acceptable? And then suddenly goes up a little bit aggressively. For us traders, we're watching that and saying, that demand is coming back. That demand is coming back. We're looking at this saying, He went from $18 to $15 discount just like that. Maybe he'll do it again. It's not coming. The discount's not coming. What just happened? The store owner is able, the vendor is able to see there's people lining up to buy the mangoes again. If you are the store vendor and you have so many people lining up to buy the mangoes again, you're going to stop giving the discounts. Prices rise again. In this part, our job, our role, why do we get paid? We say, I can buy 5 mangoes. I can buy 5 mangoes and sell it at $19 to all these people who are standing in line saying, please get me some mangoes. And our job, by us also standing in line and grabbing a few stock, we say, hey, all of you guys waiting in line, I got a few mangoes. Will you give it to me? Can I make my margin? That's our trader's job. That is our role to fulfill in the market. We are here not to hit a buy or a sell button. We're here to actually fulfill a demand that is an imbalance. Okay? And if you do that fulfillment wrong, then the money goes instead of comes. This is a very, I guess what I don't even know how to explain this. It's a very unusual way that the market's looked at, because the market's looked at with sunglasses, basically, if you want to put it that way. People are looking at the market saying, you know what? If I see this, I need to draw a trend line. Okay, let me just draw it like this. I need to draw a trend line. And as the trend line is touched, I need to buy it. Is that how people get paid in real life? Like, do you go into your office and be like, if my boss comes in at 9, but normally he comes in at 9:10. So if tomorrow he comes in at 9:12, I should get paid? What kind of logic is this? That's not how people get paid. People get paid for only 2 reasons: product and service, and actually inheritance, but we're not going to get into that. So these are the only ways that people get paid, right? So you have to understand what industry you're dealing with. It's not a strategy game. It's not a technique that's missing. It's not a golden key. It's simply what is happening. Do you understand it? And I hope, this podcast that Etienne's, we've worked together to say, let's get this out there to people. Let's make sure they can actually understand, hear this information, and then let them decide for themselves when they look at the markets, does the penny drop? Does the change click, right? So let's take a look at this. If the prices come down and then the demand goes up, what happened is, here is when the mangoes, there was a shortage, prices went up. And then it went up again. But now think about it. How much up? A little bit more. What do you think the demand is now? Less. People buy and it goes up like this. What do you think the demand is now? It's messy and less. No one's willing to pay those prices anymore. So now, if I draw that same trend line thingy, this is okay. This is okay. Try doing this. Same exact pattern, it won't work. Because the logic is kicking in. You need to identify the logic, not the pattern. The pattern will be there every time. Every pattern works at a certain extent until it doesn't. You have to understand that. So you can't enter the markets as a pattern junkie. You have to understand, why is it even moving? And what is my role? Why do I get paid?
Definitely a good point there. And it's good to kind of take a step back. Sometimes people see it as like it's something they've heard for years, use trend lines or this tool or that tool. But taking a step back helps to kind of see it in a better perspective here. So interesting to go through this.
Yeah, absolutely. So, let's take a look at this. So I have my team looking at this today. Let's take a look at this. Let me take you up to 60 minutes here. Okay. Now, if you see this as a buyer's market, right? Like massive, market was down. And then the buys are coming in. So if you look at this from a seller's perspective, we can do that. Excuse me. We can do that as well. Okay. If you are a seller, okay, if you're looking at this and your training tells you never trade against the flow and this and that. And so, okay, good. So you want to sell, but what is the main thing for a trader? Timing. If your timing is flawed, you're going to get stuck in a stop loss or a drawdown, and none of those are fun. Okay. So timing is of the essence. How does timing fit into all of this stuff? Downtrend market. Okay. Downtrend market. Anything that comes against the trend, just think of it as a discount. People want to get rid of this stuff, and then there's a discount coming. Shall I switch it to an uptrend? Maybe it's easier to grasp that knowledge of trend and discount. Let me make this Aussie yen. All right. So the flow is upwards. Should be easier to understand now. Flows upwards. Anything that comes down, that means the price, whatever was the price, it's getting discounted. Okay. So rather than putting a lot of focus here, I want you to think of the focus from here to this ratio. Think of the focus in terms of what is happening to the price and how are people responding. Okay. Because they're human beings trading this thing. They're not robots, right? All right. Now, prices have been going up for some time until it reaches a pinnacle. A pinnacle has been reached where they say, enough. We can't buy at these prices. There's no margin. That is when the vendor has to sell at a discounted rate, because he's like, no one's going to buy this. I have so much stock left. He starts giving it at a discount. So let's say this price is 89.10. He says, let me discount it down to, what is this price? 88.75, let's say. Let's see if people buy it. How's the response of the buyers? Don't look at green candle, red candle. Just look at it paused, it went up. But how is the pressure, the intensity of the buyer? Poor. Stand by. Store owner has to give a discount further. Then here it comes. He gives a little bit more discount, not like this. It's a little bit more discount. Let's see how much buyers come in. Okay. There's a little bit of intensity. Let's see if the store owner gives a discount again. Discount comes in further. Some more buyers. Discount comes in further. Some more buyers. Discount comes in. And then boom. This price suddenly is acceptable to buyers again. If it's acceptable to buyers again, what actually happens is, if let's say I'm the store, I'm the person who wants the mangoes, and this price is where I can actually make some money. Am I going to buy one piece? I'm going to go buy as much as I can. And when I buy as much as I can, all the store owners around me saying, oh my God, I think this is it. They're going to start buying also. They're going to start buying also because they see the price rising back up, and the store owner stopped giving discount. This is when the market takes the shift in turning back around and going back with the flow, which originally had the demand. Okay, so in this entire language, was there any discussions of this is a Fibonacci retracement of so-and-so percent? No. Was there any discussions of this is a demand area, that's why it happened? No. Was there any discussions of, support resistance, baby? Yeah, that crosses here, crosses there. No, none of that stuff. It is what is happening and how did people respond? What is happening and how did people respond? This is the true nature of what the word price action actually means. Price action is still jargoned a lot with draw this, draw that. Don't draw anything. Price action means look at the price and try to understand it and see what it's actually doing. Our team's, heavily on the buy side on Aussies today, and Aussie dollar being our front runner on this. So same thing, markets are going up, discounts were offered, and then boom. So look at the way the buys happened this morning. Okay, 6 o'clock in the morning, and during Asia, my time, during Asia, this is not a common demand. This is not a common demand. This is a massive imbalance. This is the mango market where everyone was happy, and then the price went up. Not by $1, not by $2. It wrecked chaos in the market. That means we can stand on the sideline as traders saying, da, 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 Superman, like I am needed here and I will get paid for my services. If I can get my hands on some of the mangoes, I can sell it to them later at a much more higher price. So then the only thing is, if you can identify where you're supposed to trade, the next game is, how do I time my entries? Keep it that simple. Keep it that simple. No need to extravagantly make it messy. And that's what you get paid for. That's where you earn your living. That's a trader's job. Turn a margin from what is needed. You can't go, if you're a real estate agent, you can't go onto the streets and start shaking people saying, buy my house, buy my house. Like, they're going to freaking call the cops. You can't scare them. It's only if someone says, hey, I need a house, you can say, oh, I'll go find you a house. That's an agent's job. Think of ourselves as an agent in the market. We are nothing but agents. And that's what we get paid for. That's our service.
And that's a good point, because sometimes people put too much emphasis on the entry, the setup, and not enough on the context over it. And I've been saying this for years. The context is sometimes more important than the setup itself and the entry itself.
Absolutely. If you understand the context, then that strategy, whatever it may be, you'll start to make sense that strategy that I'm using will work here, but it won't work there. Because all strategies work to a certain degree. You just need the right understanding of what the market's doing, right?
What's the reason why you would trade only the open? Is it because all the big move happened before the open, then you want to be in for like a pullback later during that open that morning, or is it for any other reason?
It's the news. A lot of the news are around the open. And what does the news do? The news, consider it like a pandemic. It causes panic in the market, chaos. And that's when the equilibrium that was calm and happy, all the mango people were happy, suddenly goes pow. And then it's like, oh, there's an imbalance in the market. We are needed. Time to go to work.
Interesting.
So the closer you are to the action, the more you are away from the nonsense of the market, because at any one given point, someone's buying, someone's selling, right? But when the news occurs and the candle goes this way straight, suddenly everybody's brain goes mostly into the buy direction. That is the one time when all the mindset aligns and the randomness sort of goes away.
How do you differentiate the news when price will come back down? Like you could fade it and price will come back down to the original price, versus a news where price will continue in that same direction and we can kind of getting on pullbacks?
Yeah. So if the prices go up extremely high, right? If it goes very, very strongly high, then you can do what's called a mean reversion, right? When things go out of balance, then what out of balance basically means is no one's going to buy at that price anymore because they won't make any margin, right? If I am the store owner and I sell my mangoes for $3, I can't buy it at $100. I'm not going to make any money. So there are some traders who will hit the sell up there and bring it down to what is more acceptable. Okay, so that is the mean reversion technique. But that is a quick in-out game constantly. Like you can do that. That's not a problem. That's an edge in itself. But the whole idea is there's a need, and the need is this way. So if it comes down and it doesn't slam down, but it comes down choppy, that's when you know, oh, they're lining up. They're lining up. They're hungry for this item. They're lining up. And so should we. So should we.
Interesting. So that's a good point. So you mentioned a quick comeback will be more like a fade or like a mean reversion. Then when it's coming back slowly, it will be more a place to look to get long.
Yes. Inclined to resume.
I want to make it clear too, because a lot of people expect that trading the news is, or you're going to trade like before the news, enter like on that move and try to get in. Because they said that big candlestick being a possible way to make money. But you're not doing that. And is there any reason why you don't do that? Just to make it clear for people.
Oh, because trading the news basically means you have to guess. Why do you want to guess? Like, okay, let's do this. Let's put it this way. Before coming to this industry, one individual, whoever that person might be, before coming to trading, he or she was in a secure position, which is a job, which means whether you screw up, you'll still get paid. It's like mostly. So there is a safety net there. But when you come into the market, what's with all this risk? What's with all this, like, you know what? Buy. like, what's with all this risk? Don't take that risk. So what happens? The odds are stacked against you when you have to guess pre-news. If news is about to come out and you hit a buy button and the news goes the other way, there's a loss. If news is about to come out, you hit a buy button and the news goes your way, the spread that increases from the broker, that'll kill you. If news is about to come out and you're like, I know I'm in the right direction, but in case it spikes me, I have to put a wider stop loss, then you don't have any margin. There's no risk to reward. So what's the point of trading the news? Trade after it. The news tells you what is missing in the market. Because once you have this understanding of what is my role, what's a trader's job? A trader's job is not to become an astrologer. It's like, we're not trying to guess the stars, you know. Our trader's job is to fulfill a demand. Once the news comes, we see the demand, we're like, got it, I'll get to work. And that's when we say, perfect, I will help you find more stock of this.
How do you know then when you turn and pull back like this after news? How do you know when you're wrong? Because you could try to place a stop loss, but you don't know exactly how far price will come back. Any techniques to?
Yeah, that's when volume comes in handy. You have to be aware of looking at the volume, because our whole job is to make sure, is that line still there outside the store? Are they still willing to buy? So our entire job is determined on that. Because if they don't buy and we bought all these mangoes, we're like, what the hell am I going to do with 500 mangoes? I'm stuck. So then we have to sell it at a loss to someone who might say, okay, I'll take it. So we don't want to ever be stuck holding the bag, as they call it in our industry, right?
And you can still get a good volume with Forex, or are you using different instrument to use the volume there?
No, just standard volume in Forex is fine. If you're in stocks, you have a better idea, because around the areas where the turn is happening, you'll see more on the tape. The tape will actually start showing you that here comes some big orders coming in. So if you time yourself right and you're watching time and sales and you know, you're focusing on that, for stocks it's a little bit easier, but Forex you can too. There's nothing wrong with it, because the tick volume is as close to the real volume, so it's fine.
And this is why I don't listen to these common sayings in trading, because there's so much wrong, and people could do something completely different from these sayings that you hear out there. Like, people have been told for years not to use the volume in Forex, and you're doing it. So it's kind of a very different thing to do. But there's something like a one way to do everything, or to do things in trading. So very interesting to hear about.
And don't get me wrong, there's people out there who, even without this knowledge, you know, they do pretty okay just because they're focusing on an edge down to perfection. But the hard reality is many people don't have that level of discipline to trade it down to perfection like that. So just understand what the market is. If you understand what it is, you have a fighting chance very easily, you know. So it makes a lot of difference.
Awesome. So I know we've been kind of going into this in depth, but what can people connect with you or reach out after the podcast to see what you're doing and work with you?
Yeah, so I'm on YouTube at Urban Forex. My email address is navin@urbanforex.com in case they want to reach out directly. And then Instagram is there as well at Urban Forex. That's more of like, my staff is forcing me to, you know, take pictures when you travel. Okay. It's like, do you want me to show you the market countdown app that we've built?
Yeah, if you want. I had a look at it while we were live. So, but if you want to share it,
how'd you like it?
That'd be cool. Pretty nice.
Okay, so this is what it is, right? So I have London and New York written here. So basically, what it's telling me, it's been open for 1 hour and 53 minutes. It also tells me what time it is locally in London. Over here is New York. New York is due to open in 3 hours and 7 minutes. So this one automatically calculates daylight savings and all that stuff. It does it for you. And you can add more markets if you want. Let me add in Sydney and Tokyo. So as you can see up here on my screen, the dark ones are open. The light gray ones are to be opened. Okay, you can make this compact if you'd like by doing it like that. And it gets a nice and clean, clean look up there as well. You can just keep it as an icon as well, in case you just want to click and open it. So this really helps to say whether you would like to do it in this format, as a countdown, or if you prefer the generic way of, I want to see the time of that city. I want to see the time of London. I like the countdown. And, recently when I was in Maldives, all the daylight shifts started happening, and I was like,
it gets confusing very quick.
Yeah. So I don't want to calculate what time exactly. I'm like 4 hours to go till the market. Got it. No problem. So Market Countdown, it's on the App Store for Macs, and it's available for free.
Looks pretty cool. So yeah, definitely I'll give it a try. I'll let you use that. Sounds cool.
Absolutely. I want to know what you have to say. I'd like to get a quote from you. I'd like to put it on my website. That this is what Etienne said about it.
Sure. Cool. Yeah, well, we got to catch up in the future, see how you're doing, of course, in person eventually. Let's do this again and look forward to catch up. Yeah, that'll be cool.
Come to Dubai. Come to Dubai.
Awesome. I appreciate it, man, for the advice, and people got some value for sure. So yeah, leave a comment below. Check out Navin and see what he's doing up there. And yeah, we'll be back for another interview pretty soon, hopefully.